Good evening, everybody. Tonight we're going to kind of do a little bit of rhetorical stuff because we're doing some sessions on option training here in the very near future. And so we get a lot of questions about, especially which options to trade and at what time, and what is the best option strategy for this pattern or that pattern. So that's what we want to kind of go through tonight, is the appropriate option trade. A lot of people ask, do you trade in the money, at the money, or out of the money options? And again, that is not me. That is up to each individual on how much risk factor they want to take. But there are times when in the money is appropriate, times when at the money is appropriate, and times when out of the money is appropriate. So first, the thing that we want to do on any option trade is identifying what type of price move we're going to have and how much time do we have to expiration. That may not be spelt right. Is that right? Is that the right spelling? So anyways, so we're looking for the trades that have high probability expectations. And we want to know what the price trend analysis is. But the most important factor in most of my option trading is the math. Now we're going to be doing some sessions here with Michael Tomset. For those of you that aren't familiar with our options room, we've got two rooms during the day, the main room, and then we have options room. And the only reason we set up the options room, well, not the only reason, but the main reason we set up the options room was because there's kind of a different terminology and obviously a little bit more sophistication in some of the option trade setups. So instead of having that conversation that would be confusing people that are still in the process of just learning how to use candlesticks correctly and may not be interested in options, we decided to move it over to another room, and that's where we trade option strategies as well as futures trades. So the important aspects of the options is timing and targets. Oh, somebody might have to help Claus. So the first thing that should always register in the back of our mind is, what is the market conditions? Are we in overbought conditions in the market, oversold, in a trend, in a choppy? So we always have to analyze what the market conditions are. And then we want to find those high probability signals and patterns. And that's what we're going to kind of concentrate tonight on. I'm going to kind of just brush through what all the different option strategies are. But most importantly is, it doesn't matter what option strategy you're going to put into effect. The most important aspect for any option trade is having the right uh, having the right trade in itself, the right pattern. And then we can narrow it down even further by the most important factor for any option trade is the math. Does the math work? So the major advantage that we have with candlestick signals and patterns is it gives us the direction of the move. It also, very importantly, gives us the timeliness of the move. And a lot of times we can pretty much speculate or anticipate the magnitude of the move. So if we see something where we have a fry pan bottom, we've got a bobble, and we've got something that tells us this is the exact time to be buying, we've got targets that we can be looking for to tell us whether the magnitude of the move is going to be at the right place at the right time. So one of the things that we want to know when we hit our target is how much time do we have to expiration. That's an important factor. And what is the strength of the signal? So, and what is the pattern? So if we've got something like this, where we can see there's a trend channel, and we know what our next target could be based upon a buy signal down here, that puts us into a couple different elements. One, how much time is it going to take if it does come back to the top of the trend channel? Where is the top of the trend channel? And how much time do we have to expiration? If this is going to take 2 weeks to get here and we've only got 1 week to expiration, that's going to have a completely different strategy. Or if this is going to be 4 weeks before it gets here, before expiration, that's another strategy. So if we have situations where, for example, we have fry pan bottom expectations, that when we see a breakout of a fry pan bottom, this is our expectation. We've got a big price move. That has a different, option strategy than something that where you can kind of measure what the move is going to be. For example, and I have that chart way down further, and I should have had it up here, is that if I'm buying options, if it's anywhere from 3 to 4 weeks till expiration, and I'm considering the monthly options, that doesn't keep anybody from trading the weeklies, but I'm going to kind of concentrate on the monthlies. That if this was 4 weeks to expiration and I see a option or a fry pan bottom breakout, I might just buy the calls outright. If it's only 2 weeks till expiration, I might be doing a spread because a spread's going to be much more beneficial. We'll get to that here in a minute. So I'm looking for things like this, like our ESPR, when it did a trend kicker signal on the breakout, this is our expectation. Do we always get big price moves? If we can find the exact spot to be buying, especially out of a slow curve, that does two things for us. Gives us the exact timing to be in an option trade and or a stock trade, and we know that the magnitude of that move is usually going to be substantial. So again, how much time do I have to expiration? There it is. If I'm 4 weeks out, I'm usually going to be buying straight calls or puts. If the trade is a shorter trade, like 2 to 3 weeks, I'll probably be doing a debit spread. And there's a reason for only being 2 to 3 weeks out. And I'll try to explain that real quick. That if you try to do a spread way out in front of expiration and the stock price starts moving, let's say you have a stock that's trading at 49, you expect it to go up, and you bought the 50s and sold the 55s for an option spread, then all of a sudden over the next 3 days, they can be, Carol, yeah. This is being recorded, so you can get the recording. If you've got an option spread and you bought the 50s and sold the 55s for a good net price, then all of a sudden the stock 4 weeks ahead of time breaks out to where it immediately goes to 57 in 3 days. Which option do you think is going to move the fastest percentage-wise? Probably the 55, because everybody's trying to buy the at-the-money. That's the whole point of buying options, is to get the leverage. So even though the stock price has moved dramatically in your favor, the spread may have gone against you because the percentage of the upper call that you sold is probably moving up faster than the percentage of the 50 call. So there's going to be times when if you're too far out in front of the expiration date, you can get upside down for a while and have to just sit there waiting for time to kind of heal things up. So as you know, Michael Tomsat comes into the options room twice a day for quite a while giving instructions. And Michael, if you don't know his background, he's written about 90 books. He is very, very good at explaining different strategies and showing when those strategies can be put in place. So we're going to be doing I don't know whether we're going to be doing an option training uh, here for the next few weeks, starting on April 1st, which is going to be a combination of identifying which trades are the best for options and then which strategies to put on those trades. How about buying options in Amazon, Google, anticipating 8 months move? Buy straight calls, and there's also no, I'd buy the straight calls on that because you're not going to have a spread that's going to be big enough that far out. So you'd be buying calls or the leaps, which means you're buying the very long-term calls. So there are times when selling a put spread is much better math-wise versus buying a call spread. So we're going to go into that. So what is a spread? A spread is basically, a spread is when you enter a buying and selling equal number of options of the same class for the same underlying security but at different strike prices or expiration. So a vertical spread is if the stock's trading at 50 and you'll be buying the 50 calls and selling the 55s. And what that does, stock trading at 50, and let's say your target is 55. If you bought, I just use this as a December call at $2.50 and your target was 55, that means it will go to $5 or basically a $2.50 profit or 100% gain. Your break even is going to be $52.50. Now on the other hand, oops, that was the other hand. If the stock's trading at 50 going to 55, oh, that's the same thing. The break even is $52.50. Now to do the spread, say you're buying the 50s for $2.50 and you're selling the 55s for $1. That means your net out of pocket was $1.50. Now if your target is 55 and it goes to that level, instead of when it goes to $5, you make a $3.50 percent profit. So instead of making 100% profit, now you're at 200 or 275% gain. Plus, your break even is $1.51.50, $1 lower. So a couple things happen when you work the spreads. It lowers your amount exposed to the trade. It lowers your break even, and it improves your returns dramatically by not having to move nearly the, this is the expiration. Now, we also have, when we teach this, we'll be showing strategies where, let's say we're expecting $5 profit, or let's say on the exact day, or on expiration day, if the stock is trading at 55 or higher, let's say it has gone to 60, well, the December 50s are now worth $10. That's how much somebody's going to pay you for when you sell it. And you're going to have to buy back the 55s when it's at 60, it's going to be at $5. So anything above 55, you're going to net $5. Yeah, so if it goes to 60, goes to 65, 70, anything above 55, your net is going to be, or your gross is going to be $5. Because no matter what price it is, the difference between the 50s and the 55s on expiration day should theoretically be $5 and even $5. Now, there's going to be times where, let's say over the next, say there was 2 weeks to expiration, and in a week and a half, the stock is now trading at 57. There'll be times when things get out of whack, and that $5 all of a sudden goes to $5.40 because things just one option getting out of whack. Or with 2 or 3 days left to expiration, your price is now $4.80, and you've got 2 more days to expiration, but the market looks a little bit iffy. Now you got to ask yourself, all right, do I sell, or is it worth holding on to a $4.80 trade to make another 20 cents? Am I better to take the profits and go on? So if in the money at expiration, what do you do? In the money. If in the money. If a stock goes close to 55, you sell 55 calls. No, you bought the trade as buying one and selling the other. If you let the other one ride, now you're just back to a being long the 50s. So you have to decide, do I want to do that, or do I want to close out the trade and then go buy another call? Yeah, you could always do that too. You could always set an order in to sell at a certain spread price. Rick, you won't get assigned. Well, yeah, usually if you have a spread on, you won't get assigned because they can see that you have a spread. So if you get assigned, all you're going to do is liquidate the other side and cover it. Yeah. But anyways, we're kind of fine tuning it. But the whole point of a spread is you've got less money exposed, and if the price moves in the direction that you think it's going to move, the other way to look at it is if we think the stock is going to go to 55, if we bought the spread and made a 275% profit, to do the same thing by buying the calls out directly, or that stock might have to go to, what would it be, about $58 or $59 to make the same percentage return. And most of the time, JC, say most of the time, you're not going to get called. You're going to just close out the position before expiration. All right, so if we've got something like this is where my training comes in, is we're looking for the patterns, like MMYT today closed right here. Looks like a fry pan bottom with a little cup and handle. It could break out. So where's the optimal place to be buying if it opens positive? Now, what strategy do we use? Well, that all depends on how far away are we from the expiration. Are we 2 weeks away, 4 weeks away, 6 weeks away from the one we're buying? So that comes into play also. So, and everybody asks, well, what strike price do you buy? Well, today I think MMYT closed at 36.60. Maybe not. I was looking at it. 36.65. So depends on what your risk-reward factor is. Now they're bidding $2.25 for the 35s. They're asking $2.90. So obviously we're going to have to buy at least halfway in between there. Well, that is 65 cents. So 35 cents. We're looking at maybe trying to get him at 260. Now, what's that do to our as far as a premium? Well, if the stock is trading at 36.60, that means we're paying $2.60 for a 35. So that means we're about $1. If we're paying $2.60 and it's trading at $36.60, we're paying about $1 premium. So that might be a more conservative move if we were buying the calls outright. If you want to be a little bit more speculative, but not have as much money at risk, you might go out and buy the 40s at somewhere around 45 to 50 cents. Now, the risk-reward factor, you got more money exposed, but it doesn't have to move very far to be making money. Whereas the 40s, it's got to move up $3.40 just to get back to the break-even level. Yes, another thing that we will be showing people is depending on how thinly an option is traded is usually a function of how much volume there is in the options, so or in the stock. Spreads, yeah, they usually try to. I didn't put it up here, but I know on Thinkorswim, if I wanted to do a spread, I could click in. I want to buy the 35s, and I want to sell the 40s, and it would give me a price of what I'd have to be paying for that spread. But then it becomes math. If I'm buying the 35s and selling the 40s, I make it kind of a rule of thumb that I don't want to be paying any more than $2 for that potential to make $3. And the reason for that is if I'm not buying something where my profitability is more than 100%, you got to remember the let's say the negatives of buying options. Number one, you're usually buying on the ask side, means you're selling on the bid side, so you're already got a spread there against you. Two, the commissions percentage-wise are a little bit greater. And three, the price is going to move a lot faster, that if you're buying when things are moving up, you're going to have to pay on the bid side. And if it turns around, that price drops fairly quickly percentage-wise. So if you're getting in on when everything looks good, if you're trying to get out when it looks bad, you've got the price going against you as well as the bid-ask spread going against you. Yeah. The monthlies usually have better liquidity. And I didn't show the weeklies on this one because they don't have weeklies. Some stocks still don't even have weeklies yet. So if we can find the patterns and know what our strategy is, we can tell how much this move is going to be compared to this move. Depending on how much time we have left, we can decide whether we want to be trading in the money, at the money, or out of the money trades. And that's also going to be a function of where are we in the market? Is there more time for the next wave to continue up, or are we getting toppy in the market? So if we've got a J-hook that we can see coming out of our classic pattern, we've got the ultimate timing of when to be buying that next option trade. Or we're looking for the big price moves, especially the slow curve. The slow curve is what has made my biggest option trades because I know what the result should be. If it fizzles right here and back out of the trade, usually on a slow curve, if they break out, the price move is fairly substantial. So my part of the training is showing people where to be buying based upon the patterns, and then Michael is going to be going into all the different strategies that you might want to do on a particular trade. Again, sometimes it's buying the calls outright. If there's only a few days left till expiration, it might be selling a put. Might be much more beneficial for selling a put spread. So the first thing that I always look for when I'm doing an option trade is what is the market doing? do I have time to find those big profit moves? So let me do this. I'm going to shut down and go to our live charts, identifying which ones are moving versus playing the ones that aren't moving. Okay, all right. So this will be a good option strategy to get into because if we can calculate, this is one wave, and now we're just starting to break out of a fry pan bottom, might have another 8-point move. We can kind of anticipate that with 4 weeks left to expiration at least, probably want to be buying calls outright. Now that's also going to be a function of how aggressive is this market tomorrow. If we wake up tomorrow and it turns out that with all the meetings they're having tonight, they've come to a conclusion that they've got enough votes to pass the new health care, and we see that the pre-market futures are up 140 points. That makes going after, oops, what did I just do? I just did that. That makes this a good potential breakout. So, number one, let's see, what time frame do you recommend for day trading options on the day of expiration? Oh, YP, that's something more you want to ask Nora in the options room. Um, yeah, I know that there's sometimes where she will buy calls inexpensively on the day of expiration, knowing the market and the stock has a good probability based upon the pattern of moving well. So her percentage gains are huge. She might be buying options at 10 cents, and if the stock moves up $2.40 on the day, her option may have gone from 10 cents to 90 cents. So, but that's going to be somebody, unlike myself, that has time to study which one charts are ready to break out on the day of expiration. So again, that's different strategies that you want to figure out that fits your trading personality. So again, my function is showing people where strong price moves, like your best friend. This is Win Resorts. Looking for that breakout type situation. What was this one? LRCX. Another one that at this little juncture right here with a doji gap up puts you in a situation where you have a strong price move. So if we can scan for our best friends, look at what's happening OSUR. We got a doji starting to move up. And we're right at a breakout level. That's probably got a good prospect of getting a fast move up here because of this signal. Basically what we saw here. So here's another strategy. That if you do see that big doji gap up, we expect a 45 degree. As soon as we see there's positive trading, pick out a call strategy. If we're 2 weeks away, and might put on a spread. But the fact that we can identify which signals and patterns are the strongest gives us much more leeway as far as what type of option strategy to put up. How are you determining your price objective? Based upon, there's going to be some where we don't have a price objective. That once we get into a 45 degree, you stay long until you see a candlestick sell signal and a close back below the T line. Now, if this was expiration day right here, and I was buying a call strategy, whether it's calls outright or a spread, and I started seeing this going into expiration day about here, what do I suspect after seeing a sell signal in the overbought area? I figure it's probably going to drift back to the T-line. I'm probably taking my profits right in this area. Let's see. Fundamentally, it's all about direction. Yes. Then you try to determine what your best option strategy is. So right now, I've got one target that I could probably anticipate, which would be this, that I'd watch to see once it got up to that top of that trend channel. Now, how long will it take to get there? I would suspect with this trajectory, it would be somewhat the same magnitude as this, so somewhere out in this area. Let's see. If you bought a call and then the stock waffles, how long do you wait for a sell signal before you sell and move on? That's like any other trade setup, Frank. Every trade that you put on isn't going to go straight up, or we know some of them aren't going to work at all. So you've got to be just as diligent to say, all right, if this rolled over and started trading down instead of doing what we expect, a 45 degree, if I'd bought calls today and say, ups, that's not quite what I want to be in. So now, obviously, when you're trading options, where we might get out of a stock trade with a 3, 5, 7, 12% loss, when you're trading the options, it might be a 15, 20, 30, 40% loss coming out of a position. But the upside is you might be looking at 200, 300, 400% gain if the trade works out. Let's see, why was I doing that? Oh, okay. That was okay. So if we have our expectations of a price move and the signal telling us when the breakout. This is a ESPR. Notice coming out of the fry pan bottom, it did kind of a trend kicker that broke out. What did that tell us? We're probably in a strong uptrend. So those are the type that I would buy. If there was 4 weeks to expiration, I'm buying the calls outright. If there was 2 weeks to expiration, I might say, all right, how far can we go? What would be a safe trade? Maybe I'm buying the 15s and selling the 20s. That might be much more effective. So again, it gives us much more flexibility as far as what to do once we see that breakout, when that breakout happens. So right now, I'd be looking at SWIR because it's right here at the breakout level. And what usually kicks a fry pan bottom into action? It's usually a big, strong move over here, whether it's a gap up or a strong bullish signal. So there's our slow curve doji sandwich breakout of kind of a fry pan bottom. That puts us right in the right place at the right time to catch those big moves. So if you look at the bigger pattern, also a bigger fry pan bottom, but there was your ultimate timing to get into it. Now, a lot of people ask, well, do you trade off a delta or gamma or anything like that? And my answer is no, because when you're doing a candlestick pattern, if you have a big fry pan bottom like this for whatever this is, 3, 4 months, what do you think's happened to your delta? Nothing. Your delta has absolutely nothing. What will be the result of this next price move? So I'm buying the patterns, not the. I don't care about delta, gamma, or anything else. I'm also looking to see what my targets might be. If I can see there's a development of a trend channel, I know at least where my next target might be. Now, not knowing what the market's going to do, but it could get there. I can mitigate my risk by saying, all right, I'm going to buy the 18s and sell the 20s. And maybe I've only got 30 cents net into that trade. But if it does come up here above 20, that 30 cents has now turned into $2, which obviously is a good percentage return. The reason I go with a spread in 2 weeks, trying to find something to give an example. Hold on, I'm trying to find an example. Well, the example is if, darn, let's try to figure out something that's moved nicely and fast. I can't think of anything. So the answer is, let's say I've got a stock that I think should be moving in this trajectory, and I bought and I'm going to just, let's say this is right around $50, and I bought the 50s and sold the 55s. Say the 55 range was right in here, because I expected over the next couple of weeks it could get up to that level. Well, if I'm 4 weeks ahead and I bought a spread and I paid X for the 50s and sold the 55s for Y, and then all of a sudden we get a strong price move, until we get to expiration, I'm going to say expiration's out here somewhere, what's happened to my 50s? They've gone up some, but the 55s have probably gone up faster because they're now closer to being at the money. So as this price is going up, probably the 55s are going up faster than the 50s, because what's the purpose of options? People are trying to get as much leverage as possible. So as the price is moving up past 55, they're probably buying the 55, which has now a higher percent premium in it than the 50s. So that means even though my price is going up in the right direction, my spread may be losing money because the 55s were moving up in price faster than the 50s. So instead of having a situation where if it was only 2 weeks away, the spread wouldn't be as substantial, and the closer we got to expiration, it would come back to that $5 spread. The 50s would be worth more, but if this was expiration and we were trading right here, and I bought the 50s for X and they sold the Ys for, or the 55s for Y, maybe right here, my 50s would be X plus, pick out a figure, 25% premium. My Ys might be Y plus 40% premium, because the 55s moved up faster in price than the 55s. Now, once they got to expiration date, it wouldn't matter what price, because now that spread would have come back to where it was $5. But in between time, the spread might be out of whack because the 55s that I sold were moving up faster in price. Clint, no, because that wasn't the option strategy. If that was my strategy, I mean, if I thought they were going to go up further, yes, I could close out one side. But now I'm just got an option trade, and but just being long the 50s might not be the best strategy at that point. What periods do you use for your stochastics? 12, 3, 3. Okay, so we did Kara. Chipotle. You can see what's happening in Chipotle. It might have a spread, and notice how it's getting started with a kicker signal. So it could come back up here to this level. What would be maybe a safe trade if we're, let's say, 2 weeks away? Or even a safe trade if I wanted to hold it longer. I might say, all right, I'm going to buy the 425s and sell the 430s, not have very much money in it. But if it does move, if it doesn't move up to 430, all right, I've lost a little bit of money. If it moves past that, I've made big money. Oh, I think that is it. The 12 is the 12-day 12-day moving average, isn't it? Okay, so that's now on something like Ultra. This is my wave 1, and this is my J hook. If this moved up here, I might say, all right, I know this was a 8-point move. This could take me, let's say, into the 27, 28. I might do a 23, 27 spread. Oh, no. Up here, 80 is overbought. Down here, 20 is oversold. And obviously, we're looking for the patterns. There's that little scoop pattern and price line. What do we get coming out of the scoop pattern? A slingshot effect. So that becomes a good option trade. So essentially what I'm looking for is kind of a morning star at the end of a flat trading, so that might have a slingshot effect also to the upside. Frank, depending on what I think the market is going to do over the next week. Now, if it's 1 week, I usually do I usually go with the a credit spread, because if I have a credit spread, I'm usually doing it above what the or below what the price is already, and if it's still moving in the direction that I expect it to, based upon the chart, my credit spread isn't going to make a whole lot of money, but the probabilities of making money on that credit spread is extremely high. So if I'm 1 week away and I think it's going to have a bullish move, but I'm not sure how much, I might do a combination of both, where I do a credit spread for the 1 week and then buy the next month out calls, with the idea that the credit spread's going to work as long as there isn't some major move. And the reason I do credit spreads within the week of expiration is obviously the less time there is for it to back off real hard, the better that the probabilities for that credit spread. So essentially what I'm looking for is chart patterns that told me there's my Morningstar signal, scoop type pattern. If it opens positive, it's breaking this downward channel. What's my next price move? The same magnitude as this move right here. So that becomes a viable trade. And then, like we saw before, whenever we see this big price move, there's probably going to be a 45-degree, depending on how much time I have, whether I want to do a weekly or a monthly. I can set up a some sort of option strategy that fits the time frame before expiration. So if we wake up tomorrow and they say it doesn't look like they're going to get to any settlement of the healthcare things, the market's heading down further. Yeah, I might be buying puts. What's my target? Probably down in this area, down in the gap area in the 50. So once again, if I can tell what my target is, show that my stochastics tell me I've still got more downside, and remember our simple rule, there's a left-right combo, and the bigger the signal, the more compelling there's been a change of investor sentiment. Saying Monday for the vote, that could be too. I haven't. I think, yeah, it doesn't matter when they're going to have the vote. I just think the longer they put it out, the more or the less enthused people become as far as having confidence that the economy is going to grow good under Trump's, oh, for crying out loud, what's happening here? Kicker signal on ACN. That is usually a very high probability of more downside. So, again, yeah, if the vote turns out negative, but I don't think they will even bring it to a vote, Carol, if they think there's any possibility of losing. So ACN, the kicker signal, IIVI, looks like a wave 3. Wave 1, we can calculate what our wave 3 will go to. And things like this, again, wave 3 in progress. So anyways, before we take on, so we are going to be doing I forget how many day training seminar. I think it's, maybe it would tell us in here. That's not what I wanted to do. For those of you that want to look at the different strategies for the different 3 Saturdays, all right. These are very comprehensive studies of options. And again, it's not so much to cram down anybody's throat what option strategies they should do. It's to expose everybody to different option strategies so that you know what you're comfortable with. Okay, the 1st, 8th, and 15th. So take a look at that, and yeah, you can post it. I did. I'll do it again. Okay. So, is there any questions that I kind of fluffed over that I didn't see? Oh, that's right. That's what I heard too. That Trump said, "Let's get this going." Which I thought was kind of odd. I would have thought he would have gotten everybody in a room and said, "All right, what better ideas does somebody have?" Okay. Any all right, we'll do a few charts. Just if everybody has one, just pick out one, and we'll try to go through them quick. So, Jim, if you want to do the double line. And in 4.2 seconds, do the next double line. We did SWIR. That was getting ready to break out to the upside. Well, what's happening to this thing? I just put in new batteries. This one you buy on positive trading tomorrow because that'd be wave 1, fry pan bottom, wave 2, going into wave 3. Lockheed, nothing of any great consequence here. As a matter of fact, that evening star signal looks a little bit daunting. If this opens lower tomorrow, close out the position. As you can see, for the last month, or most of the month, hasn't moved anywhere. Amazon, same scenario. This one's not moving anywhere. Same thing with Apple. All these are moving sideways, kind of in anticipation, I would say, that they politically this market is not going to get moving until there is something done on the healthcare situation. Nike, I don't know what to tell you there. When they gap down like that, I would have suspected they should be going lower. So I wouldn't be going long. I'd be more apt to be going short. If it came back down through today's open, I'd probably be shorting it. Deer, there's nothing there either. For two reasons. One, there's no trend to it right now, and two, the percentage move is going to be very minute, or the percentage returns. E, don't even know what an E is, but if you like it, you stay long. It looks like it's a ADR. And Shopify was acting well. You stay long as this stays above the T line. Ultra Group, this one you can short on weakness tomorrow. If it opens lower, you're going to have a strong bearish doji sandwich, which I would suspect would take you right to the 50-day moving average. AUPH, kind of that sluggish start today, but another one you can be buying if you start showing more signs of move of your fry pan bottom. Look at the kind of the little slow curve. This is your message. The message is they gap it up big, but there's profit taking. You get ready to buy when you see the profit taking's over, which was illustrated by a bullish Harami, then followed by positive trading the next day. Snap, somebody recommended it again. So not enough chart to really get a taste for it, but if you like it, you can be buying it as long as it stays above the T line. Blue, you should be out of it, and you shouldn't be back in it until you see a close above the T line, and your stochastics tell you probably don't want to be long or short this one right now. And BlackRock, stay short. So you see a confirmed buy signal, which would be confirming above the T line. FAS, nothing here yet. It's been breaking down. You stay short until you see a confirmed buy signal. ETE, nothing here either. I wouldn't be long or short. No direction on this one. AAIO, we were waiting for a positive open. You still want to be a buyer of this one. If it comes back up through today's open, making your J-hook pattern back, putting it back into effect. Philip Morris, stay long, but it has to open positive tomorrow to stay in it. If it opens lower, coming down through the T-line with a bearish doji sandwich, you want to be out of it. I'm suspecting that was Nugget. Nugget kind of sluggish right now. Let's see what. Gold is off a little bit, off $3 after hours. Oh, somebody's private messaging me. Michael Tomset, to answer your question, is probably one of the best teachers you're going to come across. He's very patient, and he's not showing you stuff where you need to learn it. He's showing you stuff and making sure you learn it, and he does a very good job of that. So a combination of me showing the signals and patterns that you want to go after and him showing you the different strategies. This is so that you have trading ammunition for the rest of your life, deciding what trading strategies work the best for you, and or wanting to go after the best trading strategies for each pattern that you come across. Baba, you stay long on this one. It's got a fry pan bottom still in progress. ILMN, another one that you can be buying on positive trading, a doji sandwich breakout. But you definitely need to see it open positive tomorrow. JNUG, again, a little bit sloggy. You probably should have been out of this one today because you can see not only did it close below the T line, but you can see the trajectory starting to roll over. It's not where you want to be right now, on the long side anyways. Starbucks, this never have traded Starbucks, and I wouldn't right now because you can see the wedge formation. It's stuck in here, so I wouldn't be long or short Starbucks. ADSK, sometimes they, oh, there it is. ADSK, another one that got kind of a wedge, but it looks like it's supporting on the 50. So I'd watch this resistance level, which isn't that far away percentage-wise. But if it breaks through here, now you're into the next wave to the upside. EXPE, if you're short or if you're thinking of going short, I'd use today's low. If it comes down through there, you want to be shorting it. You can see how when they brought it up today, they failed at the T line. The SPY is kind of soggy still, as today it sold right back off as soon as the announcement came out that they were delaying the vote. And Momo, is still in an uptrend. Not anything wildly exciting, but if it opens positive, it's going to go back up to the top of the trend channel. GWPH, stay short until you see. If I was short, though, I would have covered my short position today, being in the oversold area and confirming that it was probably going to pop up at least to the T line. And I would not go long until you see it close above the T line. And I'd go short if it came back down through the open of yesterday. IMMU, stay long. That's a good looking chart. Netflix is another one that's just kind of soggy sideways. Probably wouldn't be long or short this one right now. So all the biggies, no, Gene, I had to dig through my drawer today to find, I buy packs of batteries like they're going out of style. And then when you need one, I can never find one. If we do the odds and edge last time, is there a fee to sit in? No. Once you take it, you can come back and take it again. How do you interpret? Did I already do this, or did I read ahead? SPY approaching the 50-day. The SPY is just, yeah, it's just not going anywhere right now. Shopify, just stay long. This is a good-looking chart. CTMX. That's soggy. This is why when you see the message, you need to see a confirmed buy signal, and there hasn't been one yet. So it looks like yeah, there's nothing here right now until you see some buying. I wouldn't want to see it close below the T line. Don't do anything until the vote. Yeah, right now that's what the market's kind of telling us, is that really is just kind of wait and see, and Lulu stays short until you see a confirmed buy signal of what you haven't seen yet. IBM stays short. Also use the T line as your stop. 5 we did. That's got the big gap up. You can be buying this one on positive trading, looking for a 45 degree. American Express, another one where you just stay short right now until you see it close above the T line. I would suspect it's ready to because you're in the oversold area, but right now there's nothing to show any great strength in it. And Tesla's having a hard time getting moving. It has to open positive tomorrow to stay positive. If it opens lower, I'd be out of the trade. And TTD stays short. So you see a confirmed buy signal. There was a left-right combo, but notice where the stochastics were. They weren't quite into the oversold area. So where's should be your suspicion that the stochastics is still heading down? Where's it likely to move to? Right back to where everybody else is watching. Oops. At the 50-day moving average. Well, shucks. What's happening? I'm guessing that's what you were looking for, Gordon. We're still buying this one if it comes back up through today's open. Chem has just gotten sideways. Well, it did just today. Oh, maybe it's my that little thing that's in the back of the computer. I might have to pull it out and put it back in. Chem, nothing here. If you happen to be long, it has to open positive tomorrow. If it opens lower, it's going sideways. Home Depot, not a very exciting stock to trade because of the lack of percentage movement. If you like it and you're long, stay long, but I wouldn't be a buyer of this one. EMR, Emerson Electric. Nothing here either. If you're short, you stay short. You definitely don't want to be going long until you see it close above the T line. And I'm still reading up on Tesla versus Edison to see what the dynamics were between those two. Lebo, another one that with it closing back below the T line 2 days ago, you should have been out of this one, and you shouldn't be back in it until they can get back up above the T line with a convincing buy signal. That could be too. We are long right now in live cattle. This is driving me to drink. We started buying down here and another purchase right here on this breakout. You can see the fry pan bottom and we can see the trajectory potential. Let's see, AKAO. Stay short, I think, yes. However, you're getting the oversold area. I'd have my stop just above the 50 at this point. NC, stay short, kind of a bearish doji. First target is probably this support level. Second target is the 50. Oh, Jason, back when I was SOS trading, the feds would come out with increasing by a quarter or lowering by a quarter. And the markets would just whipsaw like hundreds of points one direction, then turn right around and go the other direction. By the end of the day, you had to see what the final result was. Click nothing here. If you're short, you stay short. After your shooting star bearish, which means it's probably moving sideways or down until the 50-day moving average catches up. NAC, nothing here either. Just nothing great. If you're long, it has to open positive tomorrow. What is your opinion about buying options before earnings? I bought Nike June calls last week because it was moving up nicely for the earnings. Well, there's an advantage to buying the options. That instead of buying 1,000 shares of stock and getting whipsawed for 4,000 or 5,000, bought $800 worth of calls, and you got whacked for $800. So if I see something big and volatile happening, I'll buy way out of the money calls or puts. If something huge happens, I make money. If nothing happens, I lost just a wee little bit. ALXN stays short until you see a confirmed buy signal. Not quite there yet. Is it reasonable to think that using the daily sessions is a good search tool? Definitely. First of all, you should be learning how to use the do the searches yourself, and then what usually happens is when I do my searches at night, I've usually come across the ones that somebody's already found in the chat room during the day. So you've got quite a few people in there that know how to do the searches very well. SWKS, just sideways. I probably wouldn't be long or short this one. ESPR, you stay long. That big ion reversal tells you that the trajectory was like this. Now I think the trajectory would be more like this. I want to stay long on that one. So anyways, the chat room is got two functions, at least anyways. One, you get a lot of good chart setups out there because everybody's looking at the same criteria. And two, it's an excellent place to kind of expedite your learning of candlesticks, because if somebody shows a good chart, at least you can ask, why is that chart good, and learn what the signal or pattern was that created that signal. Schlumberger stays short, and a good place to ask questions. Bidu, I would stay short until you see a confirmed buy signal. Notice the failure at the 50, then a bearish engulfing signal. Stay short. I'd probably at this point use the T-line as a stop. Let's see, UVXY, kind of a bullish doji sandwich. You can be buying this one. There is no GMRX that I can see. Well, something's happening here. GRMX. It must be that little gizmo on the computer going bad. It's something screwing up there. Let me try something. That's what's happening. how that got there. GMRX. Tesla GMRX. That was not coming up. EXTR. That one you should be out of. Don't know whether I'd be going long because you're in an uptrending channel, but I'd be out of it and I wouldn't be back in it until it climbs back up above the T line. Use stochastics. This chart right here could be a 1-minute chart, a 5-minute chart, a daily chart, or a monthly chart. They all have the exact same criteria on it. Don't worry, Jason. They will come up with a solution. That's just great. ZYNE did a bullish engulfing signal. You can be a buyer of this one if it comes back up through the 50 tomorrow. No, Frank. Remember, part of your investing process is what is the market doing? If the market looks like it's in a choppy stage or indecisive stage, even though you've got some good charts out there, that doesn't mean you necessarily have to jump right into them. But there are a few that like a kicker signal that I may more apt to go after no matter what the market is doing. Oh, CE, it shouldn't be in an empty room. If you're in an empty room, that means you've gotten a bad connection. There's usually 15, 20 people in there at all times. Oh, Nike. Uh, you bought Nike calls in June. The June calls. Yeah. I don't know what you do with them. It's not a good chart. What do you do search on? What system? I usually use the Warden Brothers TC 2000 system. You can use Metastock. And yeah, we can do a scanning session. Ow. Mags has to stay above the T line to keep the uptrend going. That's a lap. GRMX. That one's still not found. Oh yeah, that's what was happening. Was somehow my Dragon Necklace speaking got turned on, and that was goofing things up. BBRY, BlackBerry, nothing here to get excited about. You can see the downtrending channel. If it opens positive, if you happen to be long, it better open positive and get you back up to the 200, which is correlating with this downtrending channel, and then break through. I'd rather pay $7.50 for it, knowing that it broke out of all this stuff. Chaikin, John, is Mark Chaikin's system was exactly what I would have loved to have been able to figure out how to do that, which I tried a few times. I just didn't have the mental capacity to say, if there's 20 good indicators out there, what combination, and I guess you still could probably do it, what combination was working in the right direction upon the reversal of a trade? And he's already done that. I see people listed on the side, but no action on the screen. If your screen is blank, there's a slide bar way over to the right side. Slide it up and slide it back down, and that should bring the text back in. That slide bar is on the right side of your chat screen. This is starting to bug me. What's happening that I'm not getting? VIPs, you just stay long right now if you happen to be long, as long as it stays above the T line. I don't know why I'm not getting, well, they may just not have it on here. GMRX, they're just saying they don't have it. So, all right. Oops, kept everybody overtime. Okay, we will see everybody bright and early in the chat rooms tomorrow. We'll see you then.